Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. We'll help you understand how the day has really panned out, the sectors and the stocks that you need to keep on your radar, and what are experts really recommending investors to do in this current scenario in the markets as well. A few buzzing stocks as well, and we'll get you expert views on those too. But first up, a quick check on how the markets have begun the last half an hour of trade. If you see both the benchmarks, Nifty and the Sensex, they're down about 0.4% each, 18,079 for the Nifty today, about 195 points lower for the Sensex. 61,160 is the level at which the Sensex is also trading at. A lot of it also has to do with the sentiments which are weaker globally as well ahead of the Fed meet. But back home, we are seeing some sentiments taking a beating because of the Go First bankruptcy, and a few sectors and stocks that are related to that are also seeing some downtick. But what's been the saving grace in an otherwise volatile market today? It's been the FMCG stocks, the paint stocks that are higher in trade today. Stocks like HUL, that's up by 1.5%. Nestle is up by 0.5% today. ITC again at 426, 0.5% higher as well. Apart from this, we do have some stocks from the paints basket like Asian Paints up in trade. Some of the auto majors like Tata Motors, Maruti up in trade as well. NTPC from the power space is also hovering higher by 0.5% today. But what's not doing well today in terms of the top market losers, you do have the Adani Group stocks that have again come under selling pressure today. Of course, some of the earnings that have come about are actually lower, and that's why you're seeing that downward reaction. Adani Enterprises down by 0.5%, by 4% today. ONGC declining by 2%, UPL down by 1.7% as well. So some of the stocks that are dragging the street, Adani Ports also down, Bharti Airtel, the other losers in the trade today. In terms of the sectoral moves as well, we've been seeing that apart from slight gains that are being witnessed in FMCG basket, in royalty, rest of the sectors are actually muted with a flat negative bias in today's trade. But let's welcome our guest on the show. Mr. Gaurav Dua joins in from Sheikh Khan. Welcome, sir, and thank you so much for taking the time out for this discussion. I wanted to begin by understanding your own outlook on the markets right now. We've been seeing 7-8 days of markets moving higher, and again there's a speed break. I was tweeting this morning that it's another month and another crisis that are facing the D Street. We've been talking about the Go First bankruptcy as well, and it's been that way in 2023 so far. Every month the markets have been looking at some or the other issue that happens either back home or globally as well, and the markets have to deal with that. And right now it's the troubles with the aviation space. But overall, how do you look at the outlook in the markets?
So, I've been on your show earlier, and about a month back, I said this is the time to buy. And after that, we have had a very, very strong rally of close to 800 to 1,000 points. And I believe from here also, we are in a market where you should be buying on dips. You will get dips of 100, 200 point, 500 point also if you're lucky, but those will be the time when you need to go and buy, because we believe that overall the equity markets are looking good to us. We are close to the end of the rate hike cycle in India. And our take is that next few months you are going to be surprised by the inflation numbers. The base of the inflation number of the last year is very high. You had the Russia-Ukraine war. Okay, after that in April, May, June last year, the prices of gas, crude oil, commodities were pretty high, and that effect will now this thing play out. And in the next few months, you will see the inflation is going to go down, moderate quite a bit, and there will be expectations of the rate cuts that will start by RBI in October, November. Based on that expectation, I believe that stock markets will do well.
Okay. Any particular pockets that you're bullish on in the markets right now? We've been seeing slight moves in the FMCG basket. Is that a space that you've been watching? The traditional consumer names like ITC, HUL, they've been hovering higher in the last month or so. Also, we've been seeing some considerable move on the upside. Anything from this basket that interests you?
This space, consumer spaces in India is where a lot of investors have made money. In terms of staples, if you look at the overall space, it's not cheap. However, we believe there are stocks that one can buy. We like ITC, uh, this GCPL. We also like Britannia. So these are some of the stocks from the staples that we like. Apart from this, we see a lot of spaces, spaces like hotels, which we believe will do well. Spaces like entertainment, which we think will give upside to the investors.
Mm-hmm.
On an overall basis, we believe that banking is a
Yeah.
space where you need to be, and we will continue to be overweight on banking, private sector bank, as well as we believe that the fall that we have seen in the PSU banks today is an opportunity to buy.
Correct. Mr. Dua, I wanted to understand, since you said banking has definitely emerged as a consensus buy for most of the analysts and experts through 2023 so far. We've been seeing the kind of credit growth that they've been reporting, even on the earnings front. Some of them have actually reported quite decent numbers this time around, and that's away from the disappointment from the IT pack for sure. But, looking at the current sphere, we've been talking about this Go First bankruptcy throughout yesterday and today as well. Some of the banks have actually seen a knee-jerk reaction. Some of them are from the PSU banking space. The likes of Bank of Baroda, Central Bank. We've been seeing even Axis Bank down in trade, IDBI Bank. Your own thoughts on could this really be a crisis that could put pressure on the PSU banking space, because they've been in a sweet spot of late, but could this really add a big speed bump?
So I mean, the PSU banking space is an extremely large space. Okay, this go first issue will have an impact on a say bank or two, but the impact is not so large. Number one, Central Bank of India, yes, the impact is large, but on BOB, it has a fairly large bank. 1,400 crores, odd crores will not make a very big, difference to the outlook. That is why I said, when these stocks, because of any event, are down by 4, 5, 6%, that is the time to buy these stocks.
Okay. Apart from the banking space as well, since we're talking about this Go First crisis, how are you looking at the group owned stocks, like the Wadia group owned stocks, Bombay Dyeing, the likes of Bombay Burma, Britannia? You did say that you're positive on structurally, but we've been again seeing some knee-jerk reactions on these stocks, about 1 to 10% of a dip in today's trading action for most of these stocks. Your thoughts on how should one be looking at these stocks and their investments?
Britannia does not have any exposure to listing Go First, so I think it is safe. Company is doing well. We believe the Q4 numbers will be excellent. On the other hand, the other this group stocks have got exposure to this airlines business, and that is where we believe that you need to avoid. Anyway, I think rest of the stocks are not very actively traded, followed by the investors. Britannia is one stock from the group which has been doing well, flagship company, and I think you can stay with that.
Okay. What about the aviation stocks? Like, do you think that this is an advantage Indigo, the kind of bankruptcy news that we've got from Go First?
Of course, yes. I mean, one of the players going out of the business is always advantage for the other players. Indigo is a very strong player in the space. Go First had close to 7.5% share of the market, and and that will be up for the others to grab. So obviously, I believe Indigo will do well.
Okay. And apart from this also, I wanted to take your view on some of the other pockets that have been in focus. The oil and gas space, for example, the paint stocks that have been rising. We've been looking at how the crude oil prices have been declining, $75, and that looks like a more comfortable level that we in India, the oil importing nation, is more comfortable with. But how does that, really impact the investments for investors who have exposure to these oil and gas spaces, both OMCs and the upstream companies, and these paint majors that have crude oil as a major component?
So, in oil and gas space, I think we need to be extremely careful here, selective here, especially given the the tax which is being imposed, which keeps this fluctuating. That has an impact on the upstream companies. That keeps them extremely volatile, I would say. On the other hand, I've seen that OMCs have also been underperforming, but now at this point, I see a lot of this value there. We also have seen a news where the government of India will infuse close to 30,000 crores for expansions in the in this OMC. So I think OMC do offer value. However, if you look at the collateral beneficiary of this infusion and the expansion in OMC, I think Engineers India could be a stock one can look at, because whenever there is a very big expansion in OMC, a lot of work normally goes to Engineers India. Engineers India could be a stock which could outperform, which could be a dark horse.
All right. Apart from this, mid caps and the small caps is a space I wanted to understand from you, but whether this is an opportune time for investors to really look at building their positions in these spaces, considering that in the last few years we've seen the large caps really perform much better than the mid and the small caps. Is it finally time that the mid and the small caps will really try to narrow the gap there?
So, if you look at the long-term historical data, 2.5 this decade, 6 or 7 times you have had a one-way upside in small cap, mid cap. What we have seen is that the upside in mid and small cap normally lasts for 17, 18 months on an average, followed by about 1 to 1.5 years of pain. So this has been a trend all across. We had upside in 2021, then the pain in 2022, then earlier than that, 16, 17 was the upside, 18 and this 19 was the pain. And this trend has always been there. So when the mid caps, small caps are down and the pain has been there for 1.5 years, that is when you need to start buying these stocks with a view of at least 1.5 years to 2 years. That is where exactly we are. So when that bottoming out process will happen, when the mid caps, small caps will start doing well, no one can time it. But if you are going to invest in good quality mid cap stock, mid cap, small caps over next few months and wait for 1.5 years, 2 years, you are going to make very, very handsome money from here.
Okay, understood that. Well, thank you so much, Mr. Dua, for being with us on the show and discussing all these pockets and the way investors should be approaching their investments in the current scenario, where we are looking at the markets perhaps pausing for a bit after that 8 days of a move on the upside, because about 14 odd minutes remaining for the markets to shut shop. At this point in time, about a 0.2, 0.3% of a cut for both the indices, although the good part is that they are off the day's low point, but still about 55 points gone for the Nifty and 147 points lower for the Sensex as we speak. We'll keep an eye on how the markets really move from here on and all the developments that could impact your investments in equities. And for that, you should stick with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in.
On the show this week, an Android flagship that could possibly replace a professional camera. The who's who of the tech world at the Business Today Mind Rush event, and more importantly, what's happening in the world of social media and gaming. This is your favorite technology show. I'm your host Ayush Alavadi. Let's begin.